Perfect. So, again, welcome to those who have just recently joined us. UK Crypto Taxation is the headline. I know, very interesting, very sorry, at the peak of its context at the moment internationally. At the same time, let's be perfectly honest, tax isn't particularly sexy, but it's extremely important, no matter where you are in the world. This one will specifically be about the UK crypto taxation, as I am a UK practitioner in terms of tax. So please bear that in mind. Some of it might be relevant to other jurisdictions, but this will be particularly focused on for those who are in the UK or those wanted to know more about the UK tax system from one way or another. So what will we be looking at today? Pitfalls, pain points, and practical solutions. So we'll start with the very basic, what is expected from a crypto tax technician? So someone who is expected to deal with your tax issues from a crypto standpoint. I think it's very important to understand what is expected because there are different levels of what we can look at. We'll obviously look at the pitfalls itself. So common issues, common areas where you might find yourself in a bit of a predicament. Just by being aware of these, you'll be halfway there. A solution itself will try and get through as many as possible, but just by being aware of it, a solution can be developed by yourselves, maybe your accountants, or maybe someone else. The pain points itself, again, something that's quite common that I would see, and I'll bring that up upon later. And then as we're going along, I'll try and take you through some practical solutions throughout this. If we have time at the end, I might give you a case study, a recent case study, if you like, and to try and see what we are seeing there. So, my name is Jamie Nutall. I'm a fellow member of the FCCA, so I'm chartered and certified as an accountant and have been for quite some time. I've been in the tax industry for nearly a decade, so still relatively new in the grand scheme of things, really. But when you compare it to crypto, yeah, I'm a veteran, if you like. Now, in terms of the crypto side of things, I started to get involved about 2019 when one of my clients came to me and said, I've sold some Ethereum. Can you help me? And I said, what's an Ethereum? I had no clue. I was a manager at this point for a top firm, and my options were to either hand this person off, which was one of my first clients I ever landed, or to figure it out. Now, considering not many people knew about it, I thought I'll try and figure it out. It took a long time, genuinely. It took lots of back and forth and really learning from that client what was going on to then apply the correct tax treatment, etc. Now, it wasn't smooth sailing, but it changed everything for me. Now, that was the very start of it. So what do I do now? So that kicked off the journey for me becoming what I am now, which is the head of crypto tax for Myna. Myna is one of the top, if not the best, crypto accounting firms in the entire country. We only deal with crypto clients. 100% of our client base is crypto related in some way, form, or another. Whether it be individuals who are actually invested in the space themselves, or they're investing through a business, or their business is actually on chain. Perhaps it's an NFT project. So we see a lot of it all day, every day. And if anyone does follow me on Twitter, I apologize because I am a self-proclaimed degen. Okay, so I am knee deep in it myself, and yeah, I just happen to be a professional as well at the same time, which I'm fortunate enough to marry the two up, and here I am. So that's a bit about me. In terms of Myna is actually birthed from a group entity, if you like, called Nefos Accountancy. So that is our non-crypto element, if you like, where Myna was birthed from. So if you see Nefos or you see Myna, it's kind of the same thing. I'm going to keep an eye on the chat as well as we're going along. Anything that's relevant at the time, I will, of course, bring it up. If I can wait till the end, I will. Degen Life, thank you, Brandon. I didn't know you were a Degen yourself, mate. But if you're here, you might be, let's be honest. So that's a bit about myself and who Myna and Nefos are. So why did I actually make the shift from a traditional accountant through to a crypto tax specialist? In a nutshell, I guess, I fell in love with the idea of smart contracts. Now, to me, smart contracts are the epitome of accuracy, speed, and data transfer. Now, being an accountant and tax technician, if you like, all of those things will affect my life. Anyone who's in finance, it will affect your life. Anyone who's an investor, tax, even law. Most things in the world now can be affected by it if they want to be, but specific things like accountants, lawyers, finance personnel are going to be affected by it at some point, whether they like it or not. And I saw this quite early on. Now, the smart contract itself, and we won't go into that too much, but that absolutely encapsulated my interest. And until today, I completely want to see that industry blow up and intertwine itself within a modern ecosystem, if you like, especially with hospitals, schools, and of course, accounting and legal framework. So that's why I kind of went, you know what, this is so big. I want to make a transition and become a specialist. And after a few years, I'm obviously knee deep in it. It just made sense for me because if your work becomes play, you're going to be great at it. Now, I'm not saying I'm the best in the entire world or anything like that, but I love my job. I love what I do. And I would like to say I'm good at it because of it. And I enjoy it because I'm good at it. So it's a nice catch 2020, nice catch 22 for me. So that's why I moved into it personally anyway. So in terms of what we do, how we do things, I just want to highlight a few collaborations that we have as well. Some of you, again, might be looking at me going, do you know your stuff? Well, we'll find out very soon enough. This is a very quick 1 hour sort of intermediate level of crypto taxation. The collaborations we have as a firm include HMRC, Crypto UK, fantastic organization, Wealth 99 as well, Zebu. You may or may not have heard of Zebu. Zebu Live was incredible last year, and I'm looking forward to this year. And recently, kayaks. And those are just name a few that we're allowed to name, of course, in terms of collaborations. So let's get into the thick of it because I know we've got an hour and it seems like an hour's a long time, but when I love what I do, it goes very quickly. And I hope you guys will get some of that enthusiasm and love for the subject coming through. So what is expected from a crypto tax technician? It depends. Now, is this person, pardon me, is this person going to be taking all of the whole holistic issue and dealing with it? Are they taking certain sections? What can it be broken down into? So, for example, you might be involved with someone who just wants to give you tax advice. So you might pay a consultation fee whereby you're talking about potentially setting up a limited company and they're giving you advice because it's an NFT project or because you're an algorithmic bot trader and whatever the circumstances are. So that in itself obviously is a very specific section of the entire discography of potential services. However, it's one of the most important because if you can't tax plan, you're limited to historical reactive behavior from your accountant, which is fine if that's what you need. But for a lot of people, especially in the crypto spaces, they need more of an active behavior. So tax planning is important, whether it's a one-off or as you go along. So that's one section of what can be expected from a crypto tax technician. Bookkeeping. Now, as someone who is within the personal tax industry, bookkeeping doesn't tend to have its light, if you like. It's more of an accountancy, limited companies type thing. But with crypto, it's far more prevalent than, say, your sole trader down the road. Yes, there would be bookkeeping, and yes, it would be on a completely different scale. But the technical skill that you need for someone who, say, makes chairs from their garage and turns over 20, 30K a year, that skill level you need for bookkeeping for that compared to someone who is maybe making the same and doing stuff from home, but on the blockchain is completely different. It genuinely is. And believe it or not, most people forget about this section. Now, if you have crypto yourself, just sit there for a moment and think, what did you do with it for the last tax season? Maybe you go, oh, well, I didn't breach the thresholds because there's two thresholds in the UK. You have to report it if you earn over the annual exemption, which for 2023 tax year was 12,300 per person, or if your proceeds are over 4 times that amount, 49,200. So you go, oh, I didn't breach those. Is that all you did? Because you might have breached that without realizing it if you understand the intricacies of it. And you can check that very easily and somewhat affordably using software, which we'll get onto later. But that's your first check. Maybe you did it yourself and you went, okay, let me throw it into software and see how it goes. Or you used you used Excel, for example, and did a manual reconciliation. Absolutely fine. But at what point does it get too hard? So no matter what you did, there would have been some element of bookkeeping. And if there wasn't, I would really question that. I've had two scenarios in my whole career whereby we've got the data from the client, put it into software and gone, yeah, that's right. It is very rare for it to be correct. Now, let's caveat that with the fact that we are who we are. We one of the best in the country, so we get the degens, those who go across multiple chains and have much more complicated issues. So yeah, that makes sense, Jamie. But still, two, it's a very, very small amount. So for anyone that's not bookkeeping, I think this is the absolute fundamental basis of all of your crypto tax needs, if you like. The bookkeeping has to be there to a relevant level. What that level is depends what you're involved in, but please do not sleep on the bookkeeping. If HMRC were to have a compliance check with a client and there's no bookkeeping done, to me that's an instant red flag. It's much like let's say you've got a client on zero, for example, and the client links up all their bank accounts. Excellent. And then at that point, you print everything off and submit it. You don't do no changes. You don't balance anything. You don't reconcile anything. It's just they've linked up the bank accounts and you've printed off the reports and used them. Now, for those of you who use Xero and are accountants specifically in that, in terms of limited companies and dealing with Xero or maybe QuickBooks, you're sitting there going, "That's ridiculous, Jamie." Yeah, you're absolutely right. It's ludicrous. But that is the equivalent to people putting their wallet addresses into software and then just printing it off and give it to the tax advisor. It's almost the equivalent to that. So be very wary. Bookkeeping, very important and necessary part of this. Then we get to the actual reporting on the SA 100. Now, this is where I started to see in the last couple of years more and more accountants starting to feel comfortable with it. More accountants understanding that certain things are under the miscellaneous income heading, if you like. So just to go into that very briefly, otherwise would be here for half a day. The most common ones are staking, mining, airdrops would be under miscellaneous income. Everything else, usually speaking, would be under the capital gains tax regime. Again, is it a trade or not? Use the badges of trade to determine that, but HMRC have quite clearly stated that it's going to be very unlikely for someone to be considered a trader. But yeah, so the reporting itself is the smaller section of it. As long as you know where to put capital gains information, how you're supposed to do that, as well as what goes under miscellaneous. And then sometimes I suppose you'll have some self-employment trade perhaps. So usual tax and accountancy sort of knowledge and rules once you get that very slight change of, okay, what's miscellaneous income, what's not. Aid with compliance checks. I'm seeing this a lot more lately, a lot more compliance checks coming through as HMRC develop their understanding of crypto, how they deal with it, and what they want to do. So it wouldn't surprise me if more and more people start to specialize in compliance checks areas for crypto, much like you have compliance checks consultants, investigation consultants for HMRC. I'll be surprised if more don't come out of the woodworks for crypto as we go forth. A basic understanding of crypto. Now, this is an absolute must for anyone who is a tax technician in the crypto space. If your client or even me sitting there talking about staking, I've just assumed you know what staking, mining, rewards, airdrops, I assumed you know what that is, and you might do, but you might not. So how can you make the determination without understanding the fundamentals and basics of crypto and the actual linguistics of it all? A client said to me about recently, last week or two maybe, how he was bullish on something and didn't even think twice, knew exactly what he meant, because I've been in the space a long time. And like I said, I'm a self-proclaimed degen myself. So it's second nature, it's a second language to me. Whereas that conversation is going to get quite difficult with an accountant who doesn't understand what's going on. Not saying you need to get involved in the intricacies of investing and creating wallets and being rugged, again, another term, being rugged, and all of that. You don't need to experience it. Most people are quite understanding that you need a little bit of help, perhaps. However, the more you know, the better. Much like how, if you were to have a rental statement for your clients, how did you know what a mortgage loan interest meant? How do you know what that meant? Because someone trained you, someone taught you on the job, right? Or you read it up, or it was an exam. Either way, someone gave you that knowledge, or something gave you that knowledge. Now, in the crypto space, it's not as easy at the moment. Hopefully, it will get better in the future. But the more that knowledge you absorb, even if it's just little words, the more you know. Because if you don't know what mortgage loan interest is and you've never heard of it, how are you supposed to know that it's limited to 20% in terms of the tax deductions within the UK? You're not you won't know that if you don't know what that means in the first place. So it's much like if you don't know what a reward is, how do you know if it's miscellaneous income or not? If you don't know what airdrops are, how do you know whether to look that up on the crypto asset manual with HMRC to know actually sometimes it's not taxed upon receipt? Very big difference there. I've seen clients be airdropped hundreds of thousands. So it's a big, big effect on them on whether it's taxed or not. So understanding the basics of crypto is very important. And the more you know, the more you can obviously then offer to your clients. The ability to spot missing data. Now, my first ever boss, wonderful man, brilliant chap. He very funny guy. One of the first things he said to me was, Jamie, we are not bloodhounds, we are watchdogs. And that stuck with me for all this time. And I still use it, as you can tell. Now, although we are watchhounds and watchdogs, not bloodhounds, there's still an element there where we need to a certain degree, make sure that the data supplied is relevant. Of course, if it's the client's duty to supply you with the evidence, I get that. And the information that you need, I get that. And of course, you have a duty of care to help them out where you can, of course. Now, the big hole in knowledge, I guess, from both retail investors at the very least and accountants is the ability to spot missing data, because it's very hard to know when something is not there, because how can you prove a negative? You can't prove something doesn't exist, if that makes sense. I suppose you can certain scientific levels, but you know what I'm saying. So just by having a way of saying to the client, actually, you might not have all that data there. It looks like you're missing a wallet address. Though that API, again, API key, do you know what that means? Look it up. It's like your bank feed, if you like, for software, for example. Your API key doesn't match the CSV file, Excel document. There seems to be missing gaps. Do you need both? So it's just kind of putting in safety nets procedures to figure out what's going on there. So I fully expect crypto tax technicians to have some degree of that. And if you look at the list there, tax advice, bookkeeping, reporting itself, compliance checks, an understanding of crypto, and the ability to spot missing data, you should have one or two of those in order to do well in this space, definitely. If you don't have any of those that you can deal with, fine, because you're here, presumably, to learn. And you will do, because now you know, if you didn't before, this is the sort of thing you need to brush up on. Do you need to know all of it? Absolutely not. Like, nobody knows everything, but the more you know, the better. But if you do start to go down the rabbit hole and you do start to learn about all these and all of those areas, you will definitely start to perform better in terms of your services, your quality of clients, etc. I've just got a note here from Finlu team. I'll go back to you at the end for the Q&A. So let's start talking about the pitfalls itself and potentially some practical solutions for you. So one of the biggest things I see is when clients stake. Now, hopefully, most of you would have seen the DeFi guidance from HMRC that came in a few years ago. Crypto UK worked together very well to respond to their call for evidence, which I think happened 2 or 3 times now. to discuss that particular guidance. So this is what I'm referring to when it's talking about staking, is specific with DeFi staking, decentralized financing. Now, it's all about the beneficial ownership and whether you lose beneficial ownership upon entering the staking mechanism. Now, the easiest and not quite correct way to explain it in terms of staking is it's like interest. You have cash in your bank and you generate interest on it. With staking, you have assets which then you're rewarded with additional assets for putting it up for towards the network and helping upkeep that and that going on. However, it's not interest, but it's similar, okay? So that's the best way you can think about it. Now, the DeFi guidance itself states that in certain situations, you might actually lose beneficial ownership, which means that there could be a disposal of those assets upon entering the staking protocol. So imagine if you bought ETH a few years ago when it was worth £1,000, and then a few years later it's worth £3,000, and you put it up for staking. Now you've potentially crystallized a capital gain of £2,000 there without knowing. So that's a big pitfall there, just in case. At the same time, you can take advantage of it, I guess, and create and crystallize a loss itself. So how do we resolve this staking issue? Well, the first one is figure out, is it a DeFi protocol or a CeFi, decentralized financing or centralized financing? If it's not DeFi or DeFi-like, then it's probably outside the scope anyway. But then how do you deal with beneficial ownership? Now, most of us won't like to trawl through the smart contracts. As much as I love them, I don't want to do that. Most of us wouldn't want to afford a lawyer who's that well versed in this area, who's going to be expensive, to deal with perhaps a few £1,000 if you're lucky worth of staking income. So how do you deal with that? Well, firstly and foremost, you ask the client. They might know. The next one is take advantage of AI. That's a genuinely practical solution. Take advantage of AI. And there will be some form of AI technology out there that can help you with deciphering smart contracts within seconds. It might not cost you too much at all. Now, is that going to be enough? Maybe, maybe not, but it's better than nothing, most certainly, where nothing is the worst you can do. The best you can do is hire an absolute professional crypto lawyer to go through the smart contracts and tell you whether you lose beneficial ownership or not. So it does depend on how much what the client's needs are. Just making sure I haven't missed any more questions. The next one is data gathering. Terrible input is terrible output. I normally use worse words than that, but this is recorded, so I'm not going to say that, but you get my drift. Terrible input is terrible output. So if the data gathered is naff, the data output is going to be naff. You're probably thinking things like, oh, Celsius, FTX, where we just can't get the data anymore, for example. Or there's another exchange, I'm not going to name them, but there's some few exchanges out there that clients use that I just don't like seeing because the data is not readily available, not as readily as I'd like it to be. So by not getting that right at the start, you really do extend your time deep. Apologies for that. So what can you do about that? There isn't really too much you can do apart from being vigilant about it. Now, there are certain scripts that can be run to diagnose this. There are certain people that can deal with this to a certain degree, but ultimately advising your clients to keep track of everything like you would any other business, any other investment is the best bet. Now, when you get into the degens and us lot who actually go on different chains and have different wallets for different reasons and all sorts, it starts to get a bit messy. So the only other real practical solution to that is start earlier. If a client comes to me in November, they're going to have a lot less chance of us getting it done in time if anything goes wrong than if they came to me in April, May, or maybe even March just to get things going. So get them in earlier is going to be a huge benefit in that. Not planning for tax payments. Now, this is possibly the biggest issue I have with the lack of guidance with HMRC and of course legislation as well. Just because of the very nature of crypto and how it works, this has caused a lot of issues. So what we can see here is, say for example, Santiago over here, pays me 1 Bitcoin for today. Thank you very much. Wonderful stuff. And it's worth about what, $50,000 at the moment, $52,000. And that would be considered as business income, trade income. It's not going to be a purchase, an acquisition. It's genuine income in lieu of taxes. So what happens there? Well, are we taxed under the income tax regime? Let's say, for example, it's 45% plus national insurance. Fine. Let's ignore national insurance just for now. Let's ignore the personal allowance. Let's just make it just, well, there won't be any personal allowance at that point, but let's ignore all other income. Let's ignore everything and just say 45% tax. Okay. So it's about £22,000 worth of tax there on $23,000 on $50,000 worth of income. Fine. Nice and easy, yeah. When I receive the Bitcoin, I leave it in my wallet. A year later, when it comes to my tax bill, because I've done my taxes early, I dispose of that to cover my taxes. Problem is, Bitcoin is only worth $20,000 in a year's time, for example. So I'm in a situation where my income tax bill is actually higher than if I liquidated my assets. That's very common when you go from a bull market, so a market where everything is going up, is doing well, to a bear market where everything is down, because there's the crypto cycle again, and this is an intermediate sort of course, so we won't cover that. But this has happened in the 2022 and 2023 tax year because of the timing of it. Also, I saw a lot of people go, I understand my liability because of how it works, but I never took it out into cash. It's like, that's not how it works. But I never did this. That's not how it works. So how am I supposed to pay it? And that's a real problem. So you need to be in a position to be able to talk to your clients and say, look, this is a real threat. We have to be very careful of not giving them financial advice. But from a tax perspective, it would make sense for your tax amount to not be exposed to the crypto space to some degree. Now, what they do with that information is, of course, up to them. You've given them the tax advice that you need to give them. Of course, if it happens the other way around, when we go from a bear market to a bull market from when you paid. So you get paid when the market's at low, say $20,000, and then you have to pay your taxes when the markets are high, when it's worth $50,000. So no one's really going to say anything at that point. The client goes, oh, I got, on that tax bill, I had to pay $9,000, but I've got $50,000 worth of Bitcoin. Whatever, that's 10%, 20%. I don't care. Not a problem. Not realizing they've actually crystallized a gain as well, and it's because of the market. So be very careful with planning for tax payments. Definitely. Airdrops. Airdrops we kind of touched upon earlier on, but that is certainly something that I personally would always pay attention to when my client has, specifically for these reasons. Sometimes airdrops are taxable upon receipt, sometimes they're not. So if an airdrop is taxable upon receipt, it will be under the miscellaneous income section, which is under income tax regime. So that's fine again, 20%, 40%, 45%, no national insurance on miscellaneous income. Now, that is only in certain conditions, and when they are not met, then there is no income tax on that. There is an argument to say, a very strong argument to say, that the base cost is there regardless, which has an impact on your capital gains later on upon disposal, whether there's a gain or a loss. Because if the base cost is zero, it's very difficult to create a loss at that point, isn't it? Whereas the base cost is your market value, you can create a loss, and of course your gain will be significantly lower. So it's very important to get your head around airdrops, because you could be taxed, and if you don't pay your taxes, that's illegal. Or you are not supposed to be paying taxes, and you've just told your client you need to pay taxes, which is just bad advice. Again, have a look at the guidance. It's not hard to interpret. Read it out to your clients. It's very palatable, and they will pretty much tell you, oh, that does apply, that doesn't apply. Now, if you understand how airdrops work and that particular protocol itself, then you might be able to not necessarily help them make the decision, but at least lay it out in a crypto-friendly manner or client-friendly layperson's terms than HMRC guidance. So airdrops, look out for them. Liquidity pools and permanent losses. Now, I just wanted to have, because we're already half an hour in and we've only covered pitfalls. Time flies. Liquidity pools and impermanent losses. I won't go into it too much. I could stay here for probably days. I would recommend that if you look it up online, there's an excellent person who teaches you how it works in a very visual way, and it works so well. I won't drop it in here in terms of names, but if you want to message me later, I'm happy to link you to that particular video, and it's explained extremely well, much better than I could. Just be aware that when liquidity pools are involved and the issue with staking where beneficial ownership might be lost, and you've got impermanent losses because liquidity pools go in with a pair of assets, USDC and Ethereum, whatever it might be, your tax number, your numbers for taxes are going to start looking weird. They might be correct, but they're going to start looking very weird. You have to start dealing with issues there. So in terms of a practical solution for that, genuinely speaking, unless you are at the top of your game, please seek professional help for liquidity pools or those around you that can help with it. Software providers are a great source for how liquidity pools can be dealt with. And then the last pitfall I want to talk about is the education itself. Now, sounds really stupid because if you're listening to this, clearly you've identified that as a pitfall. So therefore, it's not going to be a case of something that you probably want to talk about. However, most people don't take the time or bother to be educated and increase their skill set and knowledge base. I think everyone should all the time, because this space is ever evolving. It's different to what it was last week, let alone last month, let alone last year. And it certainly will be different tomorrow and the next day after. Constantly learning and consistency is key. Having a quick look to see if there's anything on here. So we've got some people talking in the webinar chat. Can I ask that if you've got questions, can you put it in the Q&A if possible? So it's all in one place. I will be going there first. Someone's mentioned keen to find that video. Permanent loss is tough to explain. Absolutely, Taylor. That's exactly it. There is a very, very good, it's weird, but a very good video online. Again, I'll talk, if message me afterwards, I'll send it to you. So those are the pitfalls and hopefully some solutions, or at least an idea of sort of periphery learning on what you need to watch out for and why. So let's talk about some particular pain points now, where it's a bit more like next level stuff. So things like compliance checks, bit about software, and of course the level of complexity as well, which ties into what we've just spoken about so far. So I'm just going to go through the questions, see if anything has related to before this, and then we'll move on. So it's in the budget for next year. Really important to consider. Great advice. Just webinar chat there, so that's fine. What is the threshold again when you have to report your taxes? So in the UK, this is from Lourdes Miranda. The threshold for reporting is under the capital gain. It's just standard capital gains and income tax rules. So for capital gains is for the last tax year, so 2023, that's done, was 12,300. It is now £6,000, and it will be £3,000 annual exemption. If you make more gains, so that's the profit, if you like, on your crypto, more gains than that, you need to report it. Or if the proceeds are over £49,200, you have an obligation to report it, even if it's a loss. Okay. Now, if that's the only requirement for a tax return, your client might want to call up HMRC and they'll tell them whether they want it or not, because it's a very weak requirement, but it's a requirement nonetheless. In the crypto space, this threshold can be breached within an instant. Let me explain why. If you hold £5,000 worth of Bitcoin and you were to sell it for £5,000 worth of Ethereum, you've just created £5,000 worth of proceeds, right? Nice and easy. It doesn't matter how much you bought it for. It doesn't matter how much the tax is paid. It's the proceeds that we're thinking about. So that's just one transaction of £5,000. If you did that 10 times, you would have breached your 49,200 proceeds threshold within an instant. Now, think about your clients, yourselves, anyone else in the space. Do you have an average of £5,000 transactions, probably not. But if you did, you'd only need 10 transactions, 20 technically, because you're going to have to sell it because the acquisition itself doesn't count in this scenario. And that's it. You're over the threshold. So we go, okay, well, what if it's £500? Well, you only need to do that 100 times, 200 times if it's one way. That's not a lot considering the average transactions, at least my clients have a year, is 3,000. So even if you have a £1 transaction and you do that 50,000 times, you would have breached it quite easily. And that's a very low amount for someone to transact in. So be careful of that. In the US, there is no limit. This is in the UK. I don't know about the US, Taylor. I do have some contacts to an excellent firm in the US. However, if that is of interest at another point. And I'm just going to flick to the Q&A section here as well. Hi, Jamie. What is the core difference between airdrops and bounty drops? How do you distinguish which of the two should be taxed in the UK? Thanks in advance. So a bounty drop is, I would say that would be miscellaneous income or trade straight away. I don't see when that would ever be tax-free, because for it to be a bounty drop, it would imply that something needs to happen. And with the airdrop guidance, if you're doing something for the airdrop, it's going to be taxable. So if it's a bounty drop, 99% of the time, in fact, I can't think of a single time when you wouldn't be doing anything to get the bounty drop, it would be taxable. So do you need to distinguish between the two? Not really, if I'm honest. They're very similar, I guess, to a certain degree, but yeah, just I would refrain from worrying about the terminology and answering the question of what's actually going on here. Yeah, so they could call it rewards, staking, airdrops, bounty drops. Okay, cool, excellent. What's actually going on though? What's the substance over form here? What's the actual mechanism underlying this name, whatever that name is? Okay. What about giving a donation of crypto for charity? What about giving a donation of crypto for charity and donations? So it's the same as saying if you had some shares and you were to give that to charity, there might be inheritance tax implications, there might be a market value implication there, or certainly a disposal. Is the charity gift aided? Then you start to look at normal sort of taxes there. So if they are giving a gift aided donation to somewhere for 10,000 Bitcoin, there's going to be a disposal. How much did you buy it for? 10,000? No worries. But then they might get the actual uplift there for a donation for it being gift aided. So it's very normal to a standard procedure. If you just take the word crypto out of it and go, right, what's happened? How much have they given? Is it gift aided or not? Can you share some of the tools, software, and platforms being used at Myna? Taylor, I don't know if I can, only because, not because I don't want to. I mean, again, if you follow me on Twitter or LinkedIn or anything like that, you ask me, I'm happy to say. Only because I don't like shilling, another crypto word. I don't like saying, oh, we use this and we love them. I might drop a few later and be fair and name as many as I can. But we'll get there in a moment. So, pain points, compliance checks. Now, we have had a few compliance checks from HMRC now, so we know exactly what they want every single time. What we do is we try and make sure that this is already on file before we even finish the work. Makes perfect sense. It's a quite normal thing if you're a normal sort of normal tax consultant, for example, manager. You try and defend your clients against potential investigation and compliance checks by making sure anything that they could ask for is already on file. So what do they normally ask? Now, they always ask for the CSV files. Now, with software, which we'll get into in the next slide, with software, there's not a complete requirement. In fact, there's no requirement to use CSV files. You can use what is known as API keys. I won't go into the technical talk about what API keys are. It doesn't really matter. It's like a bank feed, if you like. So basically, you're saying, when you're doing the work for the client, are you taking their bank feed or are you taking a CSV printout from their bank account? Right? It's preference, right? That's what you'd think. Regardless, HMRC will always ask for the CSV files. So sorry about this. I can't put a do not disturb on here. So The problem here is HMRC will always ask for the CSV files, even though you might not always use the CSV files. And you go, okay, fine. Well, the two are the same, right? You'd hope so. The truth of the matter is, it's not always the same. Sometimes you have additional data, one or not the other. Sometimes they don't match. Sometimes there's holes in one or the other. What we tend to do as a firm is we get both. We get both, we cross-reference them, we do our best to try and plug in the holes. Software helps, but it can only do so much. Regardless of that, HMRC will always ask for the CSV files. We'll always ask for the CSV files, and therefore will be I would recommend you have them on file and at least make use of them in terms of cross-reference if you're using your API keys. They will ask for the treatment of airdrops. Now, as you can tell, it's very important. It's quite a common mistake people make, and HMRC are aware of that and will ask for that. So always have on file what you've done and why, because if there's a compliance check, they'll say, okay, what's the treatment of them? Sometimes you might find that the treatment is not a one shoe fits all type thing, of course, because there's an airdrop from here, you might have done something, airdrop from here, you didn't do anything. So please do keep that on file, because if there's a check, they'll ask for it. They'll ask a list for all the wallets, exchanges. I say etc. because it could be a hot wallet or a cold wallet, a ledger, a SafePal, whatever it might be. But they'll ask for all the names of them. So you've got crypto.com, Binance, maybe you've got a Phantom wallet, MetaMask wallet, whatever it might be. So they'll ask for a list of that. So if you should be able to obtain that quite easily. They'll also ask if they've used crypto to purchase anything. At first, I didn't quite understand why, but then I realized that's for layperson in terms of crypto. They might not realize that that's a taxable moment because it's a disposal of the crypto asset, say Bitcoin, Ethereum, to purchase some sunglasses, whatever it might be. Like I actually, might have been these pair of glasses I purchased with my crypto card, which I converted some crypto to USDC to then GBP, loaded up my card, used it to buy some spectacles. Now, that's a disposal, two different points actually, but some people don't understand that. So they ask, did you use it to purchase anything personal? And then I suppose it's a loaded question. Did you account for it correctly? Forked assets. Now, forked assets is, if I had more time, would cover this, of course, specifically, but forked assets, there's two types of forks, hard fork and a soft fork. Now, this is a very complicated area, but nearly as complicated as liquidity pools, if I'm perfectly honest. So with a hard fork is where you've got an asset that starts on one network, if you like, on one sort of chain, one trajectory, and then for some reason it completely tears apart, stops, and there's just a new asset that's created. Now that's quite simple in terms of rolling the base costs forward. HMRC have a very good guidance for that, if I'm honest, as well as some software providers. Again, they're fantastic. They really do a good job in deciphering this, so do read up on their websites. A soft fork, however, is where you've got one asset going one way and then it's kind of half split, so you've got two assets. That's when it gets tricky. For example, what you should be doing is determining what element of the base cost should be transferred across to the forked asset, if any. But at the same time, if that second asset were to go kaput fairly soon, you can actually revert that and go, actually, no, I didn't want to do that. That didn't turn out too well. Let's put it back in here, or make a negligible value claim to create that loss, which is what most people would do. So you've created that loss at that point, and then it kind of makes up for the lower base costs over here. Gets a bit messy, but be careful of hard forks and soft forks, which is why they ask about it, because then they go, okay, well, how did you deal with it? Basically talking about the base cost of the assets. They ask if you earn anything by way of employment. Makes sense. If you have and you've not, and they can't see anything under self-employment, then they're going to ask questions, obviously, because it's not right. If you have and you put it into miscellaneous income, that's not quite right because there's no national insurance, no national insurance on there when they should be because it's employment income. It's just the fact that they paid you by crypto doesn't matter. Now, if your employer, so it's actual employment rather than self-employment, for example, so PAYE were to pay in crypto, that should be dealt with the payroll itself. But I don't know too many people that would do that. And don't get me wrong, there'll be certain people, I'm sure, in my firm that would want to be paid in crypto. We could deal with that. But we are experts in the area. So I don't think many people want to do that outside of someone like us, for example. So it's more about if it's a self-employment, I guess. A lot of devs, mods, or developers, moderators for these projects would be paid in native tokens. That is also it's quite an important thing, and we've got time to quickly touch upon it. Share option schemes, most councils should understand and know that to some degree. People are currently being sold what I would like to call token option agreements rather than share option agreements. They're called SAFs in most cases. And that's effectively what it is. The problem is it can't be qualified by or approved by HMRC. Therefore, you can't lock in the base cost of zero or very little at the beginning. So when you do actually have the vesting period and you do actually start receiving those tokens across X amount of time, it's the market value at that point. So your income tax bill is going to be a lot higher than you expected. So I'm sure that's part of this question. And then finally, they ask about mining and staking specifically, again, presumably just to make sure you get it right in the miscellaneous section. So this is extremely important because if you can tick all these off when you're doing your checks before submitting it to HMRC or even sending a draft to your client, you're probably 90% of the way there to defending them. Software. Is this available? Yes. How much does it do? Most of the work, not all of it. We've already covered some of this before. And where should I be looking for issues? Lack of data causes issues. Lack of understanding of what's going on will cause issues. Base costs issues will cause issues in the future, of course, because if your base cost is out, your calculation is going to be out going forward. Someone said, what software do you use? We genuinely use an array of software, and in no particular order, the ones that we have used are Coinly, Crypto Tax Calculator, Recap. There's a few others out there as well, which we have used in the past. Coin tracking, really good for ERC 1155 tokens. So that's like NFTs on the Ethereum blockchain. Really good at picking up the base cost for that, whereas Coinly isn't. But we would rather fight that battle in certain situations than the other battles, if that makes sense. You have to pick your battle because none of them do everything really. And then there was a Cointing which was taken over by Glassnode, which was taken over by Blockpit. I believe it's called Blockpit now. So there's a few that I can name off the top of my head really. So yes, available, does do a fair bit. It deals with the section 104 pooling issues. I say issue mechanisms. So you don't have to manually. I wouldn't want to do that when you've got everything else that's blown up around you, because once you start focusing on other things, it's the easier bits. I always find that you kind of miss out because you go, oh God, yeah, that was so easy. I didn't even think about it because I'm over here fighting a fire over there. So definitely use software. I refuse to work with any clients who don't want to use software. It is up to them if they want to or not, obviously, because it's their data on a third party, but I can't. I would do the work, but I'll be charging 5 or 6 times the amount of my fees, which are already not cheap, to do it off software. So I highly recommend using software, even if you think, oh, it's 100 transactions. Use software, it's not going to cost very much. And the client obviously should bear that in most situations. Where should I be looking for issues? Data itself, it depends which software you use, but data will be across the board. The actual treatment of airdrops itself as well. Sometimes there's a little tick box or a slider to decide whether it's taxable or not. That can cause issues because what if you've got both? And that's probably it in terms of the software itself. A very small section, but one that's very important. And then finally, before we move on to the questions, we're going to talk about the different level of complexities within the crypto tax accountancy space and things that perhaps would reflect your fee, your time, your skill, your knowledge, and everything else around it. Again, apologies. I'm not 100% today, so apologies. So the first one is arbitrage trading. Fairly straightforward and simple. You're buying things, you're selling things. Nothing too complicated there. I suspect most accountants should be able to deal with that. And if they use software as well, there will be very, very little problems in most situations. It's the simplest form of what I would expect as a client. Anything that, even this type of thing, this type of individual probably wouldn't come to us because there's plenty of other options more suitable for them if that's the only thing that they are doing. EVM compatible NFTs. Now, if you, again, I know this is an intermediate level talk because you need to know something about crypto. So NFTs, very short, non-fungible tokens. They're specific. EVM compatible means they're on the Ethereum virtual machine network. So anything like Aave, Polygon to a certain degree. Obviously, anything Ethereum based. That is fairly straightforward because you've got things like what's it called? NFT Bank, I think it's called, a software we have used where it actually tells you what the base cost is. Recap, one of the softwares we talk about, anything that's EVM compatible, they can pull out the data for that quite easily. But certain softwares like Coinly won't pull that data at the moment, so you'll have to find that. But yes, so if it's EVM compatible, then that should be a little bit difficult, but not too difficult. Staking, you know what staking is by now. You don't. Not particularly difficult, but something to be to consider. Considering that there is the DeFi guidance with HMRC, and you might lose beneficial ownership. In lieu of service, so you start talking about a self-employed person. So we start to take it a little bit more complicated. Does it meet the badges of trade? Is it actually a service? Is so okay? What are now new expenses that I'm not used to? Perhaps gas fees become expensed. So yeah, we start to think about a bit more there. Liquidity pools. I say this every time. I've been doing it for a couple of years now. This type of talk, liquidity pools. Please look it up online, YouTube. Liquidity pools. I can't remember the guy's name off the top of my head. I'd love to give it to you straight away, but message me at some point on LinkedIn, Twitter, my email, and I'll send you the video. I'm not endorsed by them. I just found it very helpful. Rebasing tokens. Now, if you don't know what they are, do not touch them. If you hear them and you aren't comfortable with it, as accountants, do just don't. It can get very messy. Rebasing tokens are where so with normal crypto, the value fluctuates quite rapidly. You hold X amount and the value goes up or down. Rebasing tokens, the actual quantity goes up or down. So how are you going to deal with that with HMRC? Yeah, it's can get complicated. We've had a proposal with HMRC, as particular a few agents, and they said, look, I can't tell you if that's acceptable or not, but we wouldn't be able to challenge it, and it seems reasonable, so sure. So no one really knows what should exactly happen, but as long as it's reasonable and justified within accordance with the current legislation guidance, you're fine. Nodes. Again, similar to rebasing tokens in terms of level of complexity and whether you want to get involved with them or not. Think of it as buying one asset which you can never sell again because it's just completely gone. So your investment into something, and then it gives you passive income. Sounds wonderful, doesn't it? Sounds great. Lots of people were doing it. Lots of people were then getting the money from it, put it back into Node, buy more to make bigger income, and then it kind of went flat and just completely died out in a lot of cases. So I would say this is probably going to be self-employment, sorry, a trade in most cases. So be careful of those. And then finally, unusual chains. They might be something that not a lot of people use, or it's a bit weird, or the data's awkward. Be very careful of those. These are the sort of things I try and pull out the client in my first meeting and go, right, let's see where you are on the scale of complexity, how many transactions and everything. Because I offer a bespoke package for pretty much 99.9% of my clients every year as well, because people change what they do. So unusual trains, try and pull that out of them. What are you doing this year? Oh, I've not heard of that. Is that because I'm not in the space, or is that because that's so off the beaten track, that it's just completely ridiculous and it's going to cause problems. Who knows? So that's the sort of thing you'd need to be looking out. And in terms of practical solutions, there's no solution for this apart from being aware of it, coming up with a game plan for yourself, knowing what you know and what you don't know. Knowing what you know is brilliant. Knowing what you don't know is fantastic. But not knowing what you know, that doesn't exist. Not knowing what you don't know, that's dangerous. If you didn't know that rebasing tokens existed and they are quite funny, that can be dangerous for you. So now that you know what you don't know, you're in a better position at the very least. So that's gone very quickly for me. I don't know if it has for you or not. These I normally do about 3 or 4 hours at a time. I want to give you a very sort of intermediate overview of all pain points, pitfalls. So it's sort of like a peripheral understanding. So while we have got questions and whatnot, I'm just going to put this up here for my contact details. That is, you're probably thinking that's Jamie's NFT. It's not an NFT, it's an ordinal. Yeah, that's another thing that you may or may not want to look into, or the differences between NFTs and ordinals. But those are my contact details. Those are Myna's contact details, and then Nephos as well, which we spoke about before. So I'm just going to go through some Q&A here. So please, while I'm going through here, answering questions and catching up with the chat, type out any questions you have. There's no question too silly or dumb. You don't need to worry about anything in terms of, oh, I'm gonna look silly. It's a learning space. If we're not willing to be seen as silly, then you're not going to learn, because you're asking questions you don't know about and someone else might not know as well. So we got, can you share some tools, software platforms being used at Myna? So I kind of half covered that in terms of the software that we use. We don't really use many tools apart from NFT Bank sometimes, but Recap kind of solved that problem in-house anyway. Platforms, nothing really that would help the general accountant. Like, don't get me wrong, I use Coinbase. I use Kraken, KuCoin, and that has helped my work, but I don't think that's what you're asking, you know. But certainly getting stuck in would help. I can't see any other questions on the Q&A, so I'm just going to flick back to the chat. Do you have crypto clients in the cannabis industry? That's a good question. So that's illegal in the UK, so I do not. I know in America, in certain states, you can do. We do have some clients where we do the bookkeeping for, and then we hand over to an American tax person to file them. But as far as I know, that none of them are in the cannabis industry, and I would probably not be able to take them on because it's illegal in the UK. What are some recent or upcoming UK tax laws regarding cryptocurrencies that have / will impact your clients that you can think of? There's not really been any tax laws coming up that I know of. I mean, they're adding a crypto tax section on the tax return soon, which is nice. It's a bit of admin. That's lovely that they're acknowledging it. But apart from that, there is the crypto asset reporting framework, which is more. It's not a law, but I think it's the G20 that commissioned it. Commissioned it to the OECD. That's in its final legs, and if and when that comes into play for the G20, that's going to have huge ramifications for a framework-based nation like us, in terms of getting something concrete for accountants and the framework in which we're going to report on. So perhaps that's something to look into. If you haven't heard about CARF, please do, again, look it up, have an idea of what's going on there. If you're really into this type of industry and want to get stuck in and start getting clients, Crypto UK, wonderful place. We talk about all sorts, including CARF. Dion Seymour. Dion used to be at HMRC. He's actually leading the talks on crypto asset reporting framework with Crypto UK, and that's one of the benefits. You get all of this type of thing. It says here, all attendees can also click the resource tab and download Jamie's presentation. Yes, please do. I try and deal with my presentations in a way where the value is by attending, not by reading. So It won't give you too much on its own, but if you obviously hear, it might jog your memory in terms of what I spoke about and why. Finlu team, there are some wallets which don't have a CSV feature. What are the alternative ways for a crypto company to provide and feed the to HMRC during the compliance check? That's a very good point. If the wallets don't have a CSV feature, you just have to give HMRC what you used to deal with it, and you'd have to obviously explain to them, like, here's your CSV files, but FYI, we couldn't use that, and it doesn't exist for this, so this is what we use. I think that's perfectly reasonable. Might be better off in a phone call than just thrown at them. The agents are obviously, they're human beings at the end of the day, working professionals who, from my experience, because of what we do at least, dread it when I call and love being worked with to try and resolve things, because I can only imagine if you're not in the space and this isn't your thing and your expertise, it's going to be a huge issue. Perhaps someone listening to this type of thing as well. So yeah, please, just whatever's reasonable in that situation, which I think what I've said should make sense. We would love to provide more information in regards to Mika in our community. Any ideas where to start or any experts you would suggest? Yes. Again, I don't like shilling too much, but I can quite comfortably tell you that a good friend of mine, James Burney, partner at Gunner Cook, is probably your best bet in terms of Mika. If it's not him specifically, he'll know someone. He's going to hate me for saying this. But yeah, connect with him on LinkedIn. He might put something on there. I don't remember, but yeah, definitely. Last time I spoke to the guy was yesterday, Brandon. He's a good friend of mine, and he's in my personal opinion, one of the best crypto lawyers in the country. And yeah, definitely the know of Mika, and at least his group team is, if not him specifically. Finlu team again, does the Etherscan with the wallet address look reasonable for them? No. No, Finlu. I see what you've done there, and that is fair if that's the last resort. However, if you don't mind putting a bit more context on there, why couldn't you get a CSV file? Surely, if it's a MetaMask wallet, for example, or something, then there will be a CSV file. If not, there'll be some form of data. I don't think I've come across anywhere where there wasn't data, unless it's something like FTX, where it's just no one there to help. But yeah, the wallet address, I wouldn't send that to them. I wouldn't feel comfortable if that's the only source of data I have for the client. If it's a few lines, like a dozen or so, fine. But like I said, our average um, transactions per year would be about 3,000. Don't get me wrong, we've got clients who, I think the biggest one we had was 5.85 million transactions in total, and that we had to, again, deal with in one fashion or another. So that type of thing would take far too long for everyone. No problem, Brandon. I'm going to wrap up very shortly. I know we've gone on slightly too long. I'm just going to go through the last comment here. Frankly, just wondering if you had any cases like that. No context, to be honest. That's fine. No, we haven't had any situations where we haven't had CSV files or at least API feeds on one way or another. So that hasn't happened thus far. I'm not sure why, if I'm honest. We've had situations where we've had to shoehorn in the available data into software and kind of play around with what was actually happening in the data that we had. So, for example, we had all the purchases and sales, but they weren't quite linking to the disposal of other assets, I believe, and we had to manually link them on software. But what we did was we created the missing links onto the CSV file, put it into the correct format, and then uploaded it. And it was as accurate as it could possibly be. So, and that's probably the worst one I can think of. So, in most situations, CSV files would be available in some form, and if they're not, they're probably on something really weird and, like I said, an awkward chain. And it might be a little bit too far for, again, your particular skill set at the moment, because everyone's clearly learning. Software gets better and we get better. So hopefully that has helped. Hopefully that's answered most of your questions. I see one more from Adela I want to get through. I've just seen that popped up on the Q&A. What about bot trading and crypto mining? Are there any pitfalls to consider aside from what's mentioned in your presentation? Bot trading, yes, I would consider that that's a high level of sophistication in terms of their investment. Now, with the badges of trade, I would always add that as a 10th question. I know that's unfortunate because it balances out the question, so you could have a 50-50 split. But I think it's important that the last question is in relation to what the client's doing. Does it have a lot higher level of sophistication than the average investor? Okay, and that's where the bot trading or algorithms come into it. But apart from that, it's fairly standard. Lots of things going on. We just have to segregate that as a trade in itself in some situations if you deem it to be a trade. In terms of crypto mining, not really anything from a higher level. It's a case of it's most likely trade. If it's at a certain level, if it's a little bit of mining, then it's going to be miscellaneous income. Again, it's all relevant to the client and what's going on. So what are the pitfalls there? Well, crypto mining itself could be self-employed. It could be miscellaneous income. Depends. So that's probably something to watch out for. But aside from that, can't see anything off the top of my head. So yeah, hopefully everyone's got a little bit something from this. It's again, I didn't want to do 2 hours because it gets very boring. But as you can see, we've already gone over our hour quite quickly and we scratched the surface. So hopefully you've come across, you can retain some of this. If you've got any questions, my details are on screen. I welcome all questions. LinkedIn is great, but I get absolutely flooded on there and I don't quite get to most of it. My emails are fine. My Twitter's fine. Just like I said, I'm a degen myself. So when you look at it, you go, "Is that Jamie? Yeah, it's me. I'm getting stuck in. I'm trading. I'm tweeting. I'm making friends." If not, we've obviously got Myna and then Nefos contact details as well. Happy to answer all questions where possible. We often do this type of thing where we offer educational content as well. So there might be even something online. I know 2020 Innovation for a lot of accountants. I did an extended version of this in 2020. I think it was in the 2023 specialism section. So yeah, I've been Jamie Nutall. I've had a wonderful time. I hope that you have taken something away from this. And yeah, good luck with whatever you need. And I'm sure we'll speak soon.